The dominoes are starting to fall. General Motors falls short of Wall Street expectations, and they're blaming it on supply chain challenges as far as the dent in their profit. What's going on is Anton from AntonDaniels.com. I appreciate you guys for continuing to rock with me. We're still going through this topsy-turvy economy in which I've predicted that a recession is on the way. If it hasn't already hit you, then you are very much affected by it because it's a trickle-down effect, right? Large companies, they pay their workers pretty good money, bonuses, profit sharing, so on and so forth. And then those workers go out and they spend their money in the economy with small businesses. Also, in addition to that, you have suppliers, supplier networks. There's so much to unpack here, right? Because when I look at an earnings report and I'm looking at different automakers, I'm looking at traditional automakers. We had Tesla that released their earnings last week. I think that Ford is going to chart a similar path, as well as Toyota. Volkswagen, I know that Volkswagen is even trying to break Porsche out in order to raise more money, in order to make that go public. There's so much happening within the industry. Apple, so many companies that are releasing earnings. Ford is laying off 10% of its workforce. 4,000, not $4,000, but 4,000 people now, possibly 8,000 people in North America total. White collar workers, but they're still scaling up and they're ramping up from a technology perspective as far as electrification of vehicles, right? Let's go into this report and then we're going to break it down for you so that you truly understand what to look for. General Motors reported second quarter earnings Tuesday that missed Wall Street expectations or Wall Street estimates after the company was unable to ship nearly 100,000 vehicles by quarter end due to part shortages. So they're saying that, hey, the demand is there, but we don't have the capacity to even be able to manufacture the amount of demand that goes along with it, right? The company maintained its previous earnings guidance for full year, saying it's confident it'll be able to ramp up production by in the second half of 2022. It also confirmed it has locked in sufficient supplies of critical battery-related materials to support its mid-decade EV plans. Now, the question that you have to ask yourself, though, is at what cost? And it's always context that needs to be added in between these conversations, because at what cost means you're trying to not only transition into what you think is the future of cars, going away from internal combustion engines and gas and everything like that. You're trying to ramp up the EV thing. We got the Cadillac Lyric and then the Celestiq. I know a lot of y'all had a lot to say on both sides of the spectrum when I did the video on that. But at what cost, right? It's supposed to cost less for you to have to maintain it, these electrical vehicles, for you to be able to manufacture it because there's so many less parts that's moving into it. But then at the same time, because everybody is competing for the same resources, battery shortages, what are they calling it? Earth materials or whatever like that, rare earth minerals in order to be able to go into the manufacturing of these batteries. What impact is it having? And are you truly saving money? And is the cost truly going to be driven out of it as a result of you moving into electrification? Let's continue. The company's shares were down roughly 3% in early trading Tuesday. Here's the key numbers. Adjusted earnings per share is $1.14 versus $1.20, and that's per share. Earnings per share, okay? Expected $1.97 in the second quarter of 2021. Revenue $35 billion or close to $36 billion versus $33 billion expected. So they had revenue, but the net profit is not as high. And 34 billion in the second quarter of 2021. So let me just break this down for y'all that's just coming into this and you truly don't understand what we're looking at, right? When we talk about revenue, they're talking about how much in sales that they had. So if they had 35 billion in sales, right? And then they say versus, they're basically telling you that they're comparing it to the quarter last year at the same time. So if they had a second quarter earnings and they say $35 billion, 35 and a quarter, $750 million versus 33.58 expected at 34.7 in the second quarter of 2021. They're comparing it to the same time last year, and they're using that data in order to determine whether or not sales are down or up. Okay? Sales are down or up because they're comparing it to the same time last year. Now, the context in that is that they're also trying to determine what factors are affecting sales now versus then. Because then maybe you was coming out of a pandemic and everybody started to be flush with cash and they want to start buying cars. and dealerships are just now getting open and a semiconductor shortage. And then they're comparing that to now, okay, people have been outside for a while. Are we still having a part shortage? What's the logistics problems that we have in? Do we need more semiconductor chips? Are you guys moving more into electric vehicles? What does that look like? And are you guys still depending on profits from internal combustion engines? So the context matters, okay? Let's continue. Mary Barra, which is the CEO of GM, said in a statement that GM has binding agreements securing all of the battery-related raw materials. Maybe that's the rare earth minerals that we're talking about. It will need to build 1 million electric vehicles annually in North America by 2025, including new multi-year agreements announced Tuesday with Livent for lithium, with longtime GM battery partner LG Chem for cathode material. Like other global automakers, GM has been working through supply chain disruptions for the last several quarters, especially with the C-19 outbreaks. And more recently, Russia's invasion of Ukraine has forced factory shutdowns and wreaked havoc with logistics across the world, especially in China. All right. Dealers have had just 10 to 15 days worth of inventory, which is not really traditional. I've seen 60 days. I've seen 90 days. I've seen some vehicles sit for longer on dealership lots. So them having 10 to 15 days worth of inventory is actually not necessarily a bad thing, but also is it because you can't ship enough vehicles, all right? Through the second quarter, company said that's much tighter than the 60 to 90 days worth of material that's typical before the pandemic. And GM expects to get more vehicles to its dealers soon, the company told investors July 1st that it had about 95,000 vehicles with missing components in its inventory. So it's got vehicles that it's even built that it can't even ship to customers because it's waiting to get parts to finish the vehicle. So they still build them. They still keeping the factory running. They still paying employees, but they can't ship the vehicles out to consumers until they get all of the parts inserted into those vehicles. Confirmed Tuesday, it expect to complete and ship those vehicles, many of them high margin SUVs, over the next few months. One thing that we also have to keep in consideration in this whole conversation is that Ford and GM strategically made very, very smart moves in getting rid of basically building regular everyday passenger cars. I know Ford was talking about phasing out Focuses and Fusions, and now they starting to ship Escapes and Explorers, and they're more leveraging the resources that they have to build vehicles that make them more money. F-150, gold mine. Silverado, gold mine. Sierra, gold mine. So they're staying away from passenger vehicles and things that don't make sense. And if you look, everything in society today is basically an SUV. GM, like most automakers, books revenue when a completed vehicle is shipped to dealers, not before. So GM makes their money and they book revenue. So basically they add it to the book once they ship it off to the dealer or the customer. And the customer has to pick it up from the dealer. But the dealers basically pay GM. GM book it as a win from an accounting perspective. So they book that vehicle as sold. And that's when they then add it to the books. Now, when you finance it and you go to GM Financial, it used to be called GMAC back when I was younger, when I used to finance vehicles, or when I financed the vehicle. I had financed the Trailblazer SS through GM before. Used to call it GMAC. That's a completely different revenue model, GM Financial, and that they're now making money off of servicing your loans. All right. They said that we've been operating with lower volumes due to the semiconductor shortage for the past year, and we've delivered strong results despite those pressures. There's concerns about the economic conditions, to be sure, and that's where we're already taking proactive steps to manage costs, cash flows, including reducing discretionary spending and limiting, let me highlight this one right here, limiting hiring to critical needs and positions that support growth. You want me to tell you what that means? Because she also says we've also modeled many downturn scenarios and we're prepared to take deliberate action if necessary. You know what that means? I'm not laying nobody off yet, but I can if I need to. I'm not laying nobody off yet, but I can if I need to. Basically, they saying that we prepared to let you go if we can't solve for a problem or if we see more economic downturns come, because our priority is to our shareholders and not necessarily to the employees. Pay attention to what's going on out here. I'm trying to tell you, the dominoes are starting to fall and people are starting to pay attention to what is going on when it comes to this upcoming possible recession that's being manufactured, right? Because They have to solve for inflation. They have to create inventory. They don't want runaway inflation like you in Zimbabwe or Venezuela or something. Zimbabwe is literally making gold coins to solve for it. They don't even really have their own currency no more. But pay attention to what's going on in the industry. GM revenue is down 40%, not laying off like Ford yet. I think Ford is probably the more nimble company because they're being proactive and they don't care. They like, that's nice. Listen, we got to make sure that we get this stock price up, get shareholder value, make sure that we protect ourselves. The GM is saying, listen, we're not going to lay off yet because we might need our people, but don't think that we won't. Make sure you join the Patreon. I just dropped a Patreon exclusive video yesterday. Link is in the description as well as pinned to the top of the chat. If you need to kick it with me personally, email me at antondaniels413@gmail.com. We're going to get you set up. Got Zoom calls, got personal calls, all of that, all right? Stay focused. Don't find yourself on the bad end of the stick. Lower your costs, increase your investments, and take advantage of what's going on in the economy. I love you. I appreciate you, but I need you to do me one more thing before we get up out of here. Make sure you share this with your family and friends. We don't want to be rich by ourselves. I love you. I appreciate you. I think that you are absolutely awesome. Let's get this bag. I'm going to holler at you later. Peace.